But with inflation now cooling and rate cuts possibly coming, could this rally keep going? Let's ask our new New Year's Money panel, Kathryn Rooney Vera, from Chief Market Strategist at StoneX, which I love that name, by the way. This is on tape. We have this for next year. So, Kathryn, in 2023, we saw the rise of AI. No, I'm not talking about in the Terminator way. You know, I think one of the movies was The Rise of the Machines. But the AI boom for big tech stocks like Microsoft, Amazon, Google, even IBM, will that continue?
Well, let's hope it continues, because 30% of the S&P 500 is comprised of those technological companies. But look, I think the best bet for the S&P next year, if it continues to move higher, is a broadening out of what we've seen in 2023, which is really the Magnificent Seven, really running the table in terms of the equity move higher. So if we get a broadening out, and if the Fed is able to nail this perfect landing scenario, which is that they end inflation with 525 basis points, 5.25 percentage points of hikes without inducing recession, without sending the unemployment rate higher, then I think equities could move higher this year.
That would be very interesting. And do you think AI still leads the way? I mean, you say AI, and Kathryn, I'll ask you this. You say AI, and a company's stock pops, it seemed, in 2023. Do you think that continues, or do there have to be results now? This is how AI is growing my business.
Yes, AI has to deliver. It's been the buzzword. Every company in their earnings reports and their guidance talks about AI because it's the cool thing to talk about right now, and it gets your stock price moving higher. And we've seen productivity gains do very well, but for them to productivity to continue to move higher, I think we need to see execution, not just talk about adoption of AI. And up to this point, Ed, what I would tell you is that in a large magnitude, companies talk about it, but they really haven't deployed it in its full magnitude.
Interesting. So I want to move quickly. We're going to go to inflation now. Kathryn, I want to ask you about inflation. So where do you think inflation, do you think it gets back? Well, the Fed doesn't think it's going to get to 2% until 2025. But do you think we see softening in inflation, core inflation specifically, without food and gas prices?
The Fed is going to cut next year. The question is when and why. The why, I think, is the most important. So if this immaculate disinflation, which is inflation moving lower, not actually deflation, prices aren't dropping, they're just rising at a slower pace. If that happens without any rollover in the labor market, this fabled soft landing, I think that's less likely than some sort of deceleration in economic activity, which would bring inflation back to the 2% target. So I doubt we get to the 2% target next year or the following year. The Fed cuts next year because inflation is moving closer to the target, or because we're in recession. There's a few things that I think we have to take into account. Right now, the markets are priced to perfection, but all of that yummy money that I like to call it from the federal government during COVID, that is drying up. That's going to be gone in the first half of next year. Rates are high, and they're going to start to pinch. So the U.S. consumer is feeling the brunt of still high inflation, a labor market that's rolling over, having to repay their student loans that they took out. That started in October of last year. Yeah.
Thank you guys. Thank you guys for this. I appreciate it. We'll talk later, I'm sure.